Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems with approximately 90% winning trades. By the way, one of those went long here just recently, and our awesome KISS systems. Hope everyone had a wonderful Mother's Day. On the weekend, for our website subscribers, we sent out our detailed weekend newsletter. Of course, for YouTube, my last video was last week, and I'll update all you guys my thoughts on the market. Just real quickly, on the market here, our primary count that we've been discussing is this nested 1212 on the S&P. We've either completed this little wave 3, or if we make another high here, it could complete over here. But then we're looking for some sort of wave 4 pullback, then another move up, 5. All right. And markets, now you're seeing some of the froth a little bit today. AMC rocked. Roaring Kitty came out this morning, touting AMC again, and this thing just moved up all day. In fact, I must have traded this 8 times. Again, it's a piece of crap. It's just a trading instrument, but you had a lot of trading opportunities all day long on this AMC. Again, that's if you're a day trader. If you're working a job, you can't do that. And that's the thing about Breakpoint Trades. We give ideas and analysis for swing trades, longer term positions, system trades, you name it. So we're not really a day trading website. We do offer some day trade ideas, but we have really something for everyone. Also on our KISS systems, again, make sure to check those out. If you haven't, go to Systems, KISS, STS tables. And today, on the basket at least, we had 2 new smart trailing stops on SSO and BIDO. See those trades just went long recently. So they're up slightly. You can see some of the others. And some of the other lists here, the miscellaneous list, these had new smart trailing stops generated today. CELH up 23% from its entry on April 24th. That's the beauty of the KISS system. It tells you when to get in. It gives you a stop. It'll methodically move that stop up over time. We also have weekly versions of these. So if you click on weekly, now these are up, some of these are up substantially. NVIDIA system would have went long back on October 28th, 2022. It's up 550%. Meta would be up 218%. AVGO 140%. Massive gains on these weekly KISS systems. And we are eventually going to bring these smaller time frame KISS systems, and we're going to give you SMS for free. Anyway, enough of that. Let's go and get back to this newsletter at hand. This is our back-end recording for our website paid subscribers. I'm going to go ahead and get this recording started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, May 13th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Again, the same general theme as I always keep. We first discuss the general market, look at the major indexes, S&P, NASDAQ, small caps. I'm going to also look at some of the big cap tech stocks. We'll look at a few of these custom indicators. We'll look at a few sectors. We'll look at the dollar, Bitcoin, some crypto stocks, commodities, precious metals, GDX, the miners, and we'll follow up with some recent trade ideas. I did add one new trade idea, but that's it. We've had a lot of really nice longs here, so I'm just going to cover what those have been doing, which have been knocking it out of the park. And otherwise, as far as the market, it was a choppy day for the market, which is to be expected. There's a lot of news coming out the last few days, from Powell speaking on Tuesday, CPI and retail sales on Wednesday, Philly Fed on Thursday. Friday is OPEC's options expiration. And again, we've already discussed what our primary count on the S&P is, this nested 1212. And let's go ahead and get started here. So item number 2 shows the index sector table, what transpired today. And you can see choppy day, basically bifurcation. S&P and Dow were slightly down. NASDAQ, Russell were slightly up. As far as the 21 market sectors, pretty much a 50-50 mix of up and down here. And in fact, if you look here, most of the sectors are less than 1%. Retail had a big day though. That's the biggest, up 2.6%. Biotech up 1.1%. US dollar pretty flat today. Crypto, Bitcoin rallied off that support. It's up 2.65%. It's now at a downtrend resistance line, which I'll show you. Commodities, the DBC, that's the index, is up 0.6%. Crude oil down 1.25%. Natural gas down 2%. Copper up 1.7% essentially. Uranium down. Agriculture, big drop. That had that bear flag look last week. So big sell-off, down 4.9%. Move up in corn and wheat. So kind of a mixed bag here in the commodities. Precious metals were up though. Gold up 1.5%. Apologize, I went ahead and refreshed this table. It was showing old data. So again, the DBC, that was correct, up 0.6%. Crude oil up 1.1%. Didn't make any sense for this to be up and not crude oil. It's a pretty big component of the DBC. Natural gas up 5.7%, continues a nice rebound. Copper up 2.2%. Really, the weakness here was in agriculture DBA, which was down 4.9%. That's a big drop. Remember, it had a bear flag look last week, rallied into resistance, big sell-off today. And coffee and sugar were down nicely. Precious metals, gold, they were weak. Gold down 1.35% today. Silver down 0.2%. GDX, the miners, down 0.85%. As far as the bond market, small decline in the 10-year and 30-year treasury yields. And the yield curve, back to that. Yield curve sits at 0.92. So still well below that. You know, it's still well inverted. It's been inverted for about 600 and over 600 days now for the 10-year and the 2-year, which is the second longest in history. Next. Item number 3 shows the economic news calendar, which I already discussed. Tomorrow, Powell is speaking, and we have the PPI, core PPI, and CPI. So those are going to be big ones, guys. All right, let's go and jump to these index charts. First chart below is the daily S&P 500 KISS system. Again, remember, this has done very well. It went long early last spring, last year. Had a nice trade into early August. Then had a little whipsaw trade in the August, early September timeframe. Then it got a great long entry in late October. Closed that out in mid-April. It did go back long just over a week ago. The trade is up. It started to move its smart trailing stop. It's moved it up twice here. It's still pretty wide. Still around 5,000 on the S&P. Next. Image number 5. Here's the 4 time frames from the daily all the way down to the 78-minute. So on the daily here, notice there's a couple A's. So what that is, that's called amateur buying. It's when you're going up on lighter volume, smaller bids. So a lot of times you'll get short-term highs with that or lows, just like you see back here. You had a little high where then price pulled back. Also on the 195-minute, we got an A and a DeMark 13. So a little frothy. If we get a pullback here, the ATR is now support notice on all the time frames. Next, moving into the standard charts, chart number 6, here's a daily S&P 500. Again, we just continue to push up. Moving average ribbon, as you know, went back bullishly stacked just over a week ago. Here added just a little thin resistance trend line to monitor. Obviously short term, another big support is the 9 EMA and then the 50-day moving average. Not too far away from the March highs now. Chart number 7, here's another daily view of the S&P. Again, just very clean chart. Again, we're up into this supply resistance zone. This could be a logical area for the market to pause or pull back a little bit from, but clearly the trend is up. Next, chart number 8, here's a 2-hour time frame of the S&P. So again, the market's moved up quite a bit here. We took out this downtrend line here last week. That is now should offer support. And the fact that we went up enough definitely leads to the more bullish case. There's also a demand zone down here if we have a bigger, larger fourth wave pullback, which I'll discuss in a minute. There is some active divergence currently on this last peak. Next. Chart number 9, here's that 2-hour chart that we're favoring on the wave count, this nested 1, 2, 1, 2 again. So what I mean by that is you have wave 1, 2, then you have another smaller degree, wave 1, 2, higher low. and then 3, 4, 5. So we could either completed this little minor wave 3, or we could have another pop here and complete it later. Okay, it's still too early to say. Once that wave 3 is complete, then we're looking for a deeper wave 4, but a higher low, then up again. The alt view would be, this is simply a WXY up here that will end the move. Again, our favorite count is the one in green. Next. Chart number 10, here's a 60-minute view. Again, we took out all these trend lines, and you can see overall we're working on this potential wave 5 here. We do have some pretty good MACD divergence on the 60-minute time frame, and that MACD is starting to recycle closer to 0. And we'll see what the reaction is to the market here. If we have a wave 5 in here yet, or we get a pullback first. Again, if it's a wave 5, I'm looking at it more as a wave 5 of 3. Next. Chart number 11, here's a 15-minute chart. Remember last week I was showing that as a wave 3, 4. And right now we're consolidating here to look like a coil. So you could either have a little 5 here, or we can make another pop for a 5. Notice the moving average ribbon is pinching again. Here I added fibs, so if we do start pulling back right from here, these fib areas will be something to monitor. Next. Chart number 12, here's the NASDAQ triple Qs. Again, slight update today, up 0.25%. Couple black candles here. We're slightly above this downtrend line, but again, losing a little momentum here short term. Chart number 13, here's the daily KISS trend system. Just like on the S&P, this went back long about 2 weeks ago. And it has a stop at 420.2. Hasn't raised it yet, so we'll keep an eye on that. Next, chart number 14, here's the 4 time frames. Again, very similar look to the S&P. Again, on a nice pullback, these ATRs and all these time frames are now potential supports. Next, chart number 15, here's a 2-hour view. Again, nice rally off that big support zone, demand zone back in late April. Nice move up, similar count to the S&P. There's a supply resistance zone up in here where we're starting to struggle a little bit. There is a little MACD divergence here developing on that recent high. Chart number 16, there's a 60-minute view, and same view. You could also see this MACD divergence. There is an open gap back here in April. We haven't quite filled that. So if we get another pop here, to me, that would be a magnet right up into there. Next, chart number 17, here's IWM small caps. Again, no changes here. Nice rally up. We've exceeded that 61.8% fib. Now, one possibility is you can form a right shoulder of a head and shoulder. It is something to be aware of. Clearly, that rising wedge played out. Gave us a nice pullback into that demand zone where we've had a nice bounce. And here's a little pro tip. These rising wedge patterns will often morph into head and shoulder patterns. So it is something to be aware of. Next, chart number 18, here's a 2-hour time frame. Shows some wave counts here. You can count 5 waves here at the moment, or maybe we need another pop. But it's possible we do have a little wave 5 there in the moment. Chart number 19, here's a 30-minute view. Short term, here's a little support trend line to monitor. If we can rally up, you got a clear breakout resistance up here around the 266 area. That does it on the indexes, guys. Let's go ahead and move on. A couple of these big cap tech stocks. Apple, as you know, that gapped up out of earnings over a week ago. A little pullback to the 200-day moving average, which held, and it pushed up nicely today. Some others, here's Meta. As you know, this one got hammered on earnings. Didn't quite fill that open gap. It rallied all the way back to back test this broken trend line turn resistance. I mentioned last week that could be a low risk short with a tight stop. I took a short there. I put a stop just above that downtrend line. You can see a nice little pullback today. Next, looking at our custom indicators, here's the VIX. Nice bounce in the VIX today, up over 8%. Look at my comments here. I talked about this extensively last week. I said the slope of the Bollinger Bands going straight down was impossible for the VIX then to go below its lower Bollinger Bands. You needed a bounce in the VIX to then cause the lower Bollinger Band slope to start flattening out. And you can see we're starting to get that bounce here. Next. Chart number 23, here's the 60-minute chart. Remember, we filled that open gap last week. We basically went down to that next low, found support there. You had that MACD divergence building there, which I was talking about, and we got a nice pop out of that. Now notice that I didn't mark it on the chart, but you had another open gap up here around the mid 14s, up to around 1470. So should the VIX continue pushing up here and the market pull back, that could be a little magnet. The VIX likes to fill these open gaps. Next. Chart number 24, here's the NYSI 9EMA crossover system. Remember, this gave an excellent short back in early April. It then went back long here in early May, and it confirmed when it went over that candle. So you had your confirming candle. Chart number 25, here's the NYSI system with the 5-3 stochastic overlay. This also, I commented about it last week ago in the weekend newsletter, that this was curling up, looked positive. And you can see it's been moving up nicely. It is now back to overbought, but over a week ago, this was oversold. Next, chart number 26, here's HYG High Yield Corporate, little pullback today. Market likes to follow this. You always want to keep an eye on it. And this led up. That was a positive for the market. Right now, it's testing this 9 EMA. Now, if we zoom to a 60-minute time frame where we compare the S&P to High Yield Corporate, if you notice, again, at the April lows, you had a nice positive divergence here where the S&P was making a lower low, but High Yield Corporate was making a higher low. That was a positive. And then that was an early sign that the market was going to rally. Short term now, you have the opposite. You have a lower high forming on High Yield Corporate. Well, you got a higher high in the S&P. So that could be saying that we got a pullback coming in the short term. Next. Chart number 28, here's TNX, 10-year Treasury yield. It's down about 0.25% today. It's still holding this channel. That's what to watch. And of course, the 50-day moving average, which pretty much matches that channel uptrend line. Chart number 29, here's TLT, 20-year bonds. Again, they have the opposite view. So instead of an uptrend channel, you have a downtrend channel, and price rallied off the support of the lower channel line a couple weeks back. Next, chart number 30, here's the yield curve. Again, we'll be interested in when this goes back over 1. It's been inverted now for 678 days, which is the second longest in history. You have to go back to 1927, 28, 29, where it was longer, and we know how that ended. I'm not comparing us to that, but just saying that this is the second longest now in history. So we're going to keep an eye on this day after day. Eventually, when this goes back above 1, I think that's when your recession comes. But given that it's election year, maybe it's pushed off until next year. I do think 2025, if you hold a gun to my head, I think 2025 is going to be a trying time for the market. Next, look at reviewing a few market sectors. Here's XLK Technology, again, slightly clearing this little downtrend line. It's above its 50-day moving average as well. So continues to uptrend. A little lighter volume here short term. Chart number 32, here's the stocks, semiconductors. Nice ABC move up so far. It's still in this supply resistance zone. Chart number 33, XOP, consumer staples. I mentioned over a week ago that this looked bullish and it broke out, made a new high. Little pullback today, but this did make a new high last week. Chart number 34, here's XLV Healthcare. So far, rallying back. Now this is a supply zone, resistance area to monitor. Chart number 35, XLU Utilities. Remember, this area has been on fire. Now, short term looks quite overbought here. You got a black candle doji, a little red candle on Friday. Moving average ribbon's very wide now, so I'd be cautious here until this has a little pullback. Chart number 36, XRT Retail. This had a nice move today, and it was off the highs. Got into that open gap a little bit. Chart number 38, XLI Industrials, logically pulling right back from that double top resistance area. And it's got plenty of support below it, those major moving averages bunched up. But logical pullback today from resistance. Chart number 38, Financials, almost making it back to the highs. A little pullback today. Moving on to the energy market, here's XLE Energy. Remember, we had this 3-wave pullback into the supply demand zone. We did bounce off of that. That could have completed an ABC, or it could just be part of the initial downtrend. So far, we've had a bounce up, but haven't taken out that last high. Chart number 40, ExxonMobil has a very similar look to XLE. You have this 3-wave pullback into the 50-day moving average. That was a low risk area to go long. So far, it's struggling here at the downtrend line, which is resistance. Now, those dividend players, there's an ex-dividend date tomorrow, May 14th. So if you want the dividend, you could buy it tomorrow and still get that dividend. It should be up around, let's see, actually I can't tell the price here, but again, the ex-dividend date is tomorrow. Next, chart 41, yen, that's the triple long ETF for China, and this puppy has been on fire. I talked about this weeks ago, that it looked good. It was in a nice consolidation pattern there from March into April, popped out of there, and it's now filled this big resistance zone, and this still continues to look really good. The other one I've been talking about is Alibaba, this weekly chart. I've been pointing out this weekly falling wedge. This broke out about 3 weeks ago. So far, steady Eddie. Again, to me, this has big term or longer term swing trade potential if you bought that break and you wanted to give it room. I own a little bit of this that I'm just trying to keep, as well as the yen ETF. Next. Chart 43, DBC commodity ETF. Again, remember we have this 3-wave pullback into this channel, and as well as the 200-day and 50-day moving average, a logical rally off of that area. It's now approaching the downtrend line. Let's see what it does there. Next, chart 44, here's the weekly view. Remember, we're forming this weekly coil pattern here. Chart 45, crude oil, back up 1.1% today. Remember, a couple weeks ago, broke that channel. Let's see if it can find support around these fib areas, form a higher low or not. Chart 46, UNG, natural gas ETF. A couple weeks ago, we were talking about this falling wedge with this MACD divergence, and this has been a nice trade if you bought that break right around 15. Nice trade. Chart 47, here's the long-term monthly chart going back to 1995. Again, to me, besides that falling wedge on the daily, it was lower risk because you were at long-term support going back to the 90s. Natural gas, as you can see, has been typically finding support for years around this area. So it was logical for it to rally off of there. Next, chart 48, copper up 2.2% today. Had a tight little coil, 4th wave last week, big breakout. This is definitely inflationary, guys. Now you do have this next push is setting up some RSI and MACD divergence. But definitely not helping Powell's case on inflation. Here's copper on the weekly, approaching those highs from a couple years ago. Hell of a move from that coil pattern, which we were posting well in advance before it broke out of here. Chart 50, DBA, agriculture ETF. Boom, down almost 5% today. This had a big sell-off. Remember, this went parabolic essentially. We had it as a long idea back in January on this coil, and it had a hell of a move, but you needed to take profits. It ended in a negative divergence on the RSI, on the MACD, and then had a big sell-off. Bounced around that demand zone, but I said that bounce back to that 38% fib looked like a bear flag, and that was a good area to short. Big sell-off here. Now, if it loses this area, which I would not be surprised, this is very ugly looking, your next demand zone is down in here, which is near that 200-day moving average. That could be an area to start scaling back into DBA. Next. Chart 51, Bitcoin. This is a 4-hour chart. Back in early May, it sold off, got into this little support zone where it did rally off of, and then it pulled back, formed a higher low around that 61.8 fib, bounced. Right now, it's struggling with the downtrend line, but this downtrend resistance line is something to watch. If it can break over this, that would be a positive, but it needs to get over that. Chart 52, MSTR, one of the Bitcoin stocks. This is more of a Bitcoin proxy as they buy Bitcoin. They don't really mine it. The bullish view would be here. You have a little inverse head and shoulder pattern set up. Okay, one to watch. Another one, chart 53, CLSK, Clean Spark. Here's another one. Now this is a weekly chart. Steve mocked this up a while back. So could be some sort of 4th wave forming here and then eventually get another 5th wave move up. Remember, this is a weekly chart, guys, so this still could come down first. Next. Chart 54, US dollar, down slightly today. Again, pretty flat. Your support is the uptrend line here. Resistance is that area up there where it stalled last time. Jabber 55, here's the weekly. Okay. Next, moving into precious metals, Jabber 56, gold down 1.35% today. So gold is interesting to me here. Now, long term, it's had a major breakout. It's going much, much higher longer term, right? There's also a lot of fundamentals here. The big demand in China. China, as you know, they don't really trust their stock market. My wife is Chinese, in case you don't know. But anyway, so a lot of people that got burned in the Chinese real estate, a lot of them are really buying tons and tons of gold. But anyway, so that's your fundamental case. And on the monthly and weekly, gold broke out. But on the short term here, it's a little tricky. It's possible we get a little wave C up there or a wave 3, and this is a wave 4. That wave 4 could have completed. You have 3 waves down, A, B, C. But there's also a possibility that this was an ABC of A, then this is a lower high wave B, then you get another move down into C, especially if you got down into this area, which is your next demand zone. This would be a low risk buy. So again, we're either going to come down to here, guys. Let me draw that in actually. So we're either going to come down to here into the C area, maybe it gets down into here, then up, or we go right up to a new high here. I'm confused. I don't really have a good preference here. So, but either way, to me, it's kind of at an inflection point here. All right. Another thing you can monitor is this GDX-GLD ratio, which is still continues to uptrend for now. Next. Jabber 57, silver. Now, silver continues to hold up better. To me, silver has a huge long-term potential. Silver had to break out from this ascending triangle, pull back tested it perfectly. That was a good area to go long, and it bounced off of it. The weekly view of silver is just absolute textbook. You had this perfect A, B, C, D, E, bullish ascending triangle, which broke out, back tested resistance, which became support. That was the area to go long if you didn't take the first breakout. Again, if you're a longer term trader and you bought that breakout or you bought that back test, I think if you're a longer term trader, I think you could just give it room and hold it. Again, I'm not a financial advisor, guys. I can't give advice, but you know, that's what I would do if I was a longer term holder. And I am a longer term holder on some of this. Next. Jabber 59, here's the monthly view of SLV. That's the ETF. Again, a major breakout on the monthly coil. And I do think this goes up to much, much higher prices over time. Next. Taking a look at the mining stocks, GDX, that's the ETF, Gold Miners ETF. It did make a brief new high here, and it's possible that new high was a wave 5, and this is now due for an ABC correction. We do have some active divergence here. We'll see. If this broken trend line is now support, if price pulls back below that, then I think that'll be the case. But if it can recover, then this is still on unfolding. Next, Jabber 61, here's that 60-minute chart. Remember, we broke out of that coil, pulled back from that resistance, made a brief new high. Here's another demand zone down here. Not much below this, then I think that high would have been a wave 5. But right now, bulls still have a chance to recover this. Next, Jabber 62, here's the BPGDM GDX Rinko system. The thing that concerns me is this went on a sell signal last week, as you can see, and it's still on a sell signal. So despite the fact that some of those stocks rallied nicely the last week, this didn't even budge. This gave a great buy signal on March 1st. This thing's been pretty accurate, not perfect always, but it's been pretty damn good, and it is on a sell signal. Next, following up on some individual precious metal stocks that I talked about last week, KGC had an ascending triangle and had a hell of a breakout. Hope some of you caught that puppy. Jabber 64, IAG was in a coil. We were showing this all last week, over a week ago, and it busted out nicely. Little pullback today, but that's fine, but a great trade. Jabber 65, EXK silver stock, also had a nice pop. Jabber 66, RGLD. This looks more like GDX. It did break out of this pattern, but so far just a minor high with some active divergence. And the final one, Jabber 67, GOLD, Barrick Gold. This broke out of this pattern, pulled back. It back tested previous resistance became support. All right, moving on to our trade ideas, guys. We've got quite a few of these. We've had some great trade ideas. So here's GE. One of our astute members pointed this out last week on our trading community, and we put it in our newsletters. Beautiful, absolute textbook rising wedge there. This triggered last Friday. Nice follow through today, basically to symmetry. Now, if this continues lower, it'll break symmetry, and that'll then set up for a potential, head and shoulder pattern. Okay, something like that. Whereas if it goes down a little bit, boom. So if this breaks symmetry, like target is the 50-day moving average, and then I'd look for a right shoulder. This looks pretty ugly. Again, we pointed this out last week. Congrats if you took that short. And you can see that MACD divergence there. Just beautiful chart. Next, Charber 69, DSL. I mentioned this last week. It's a dividend player. It's pretty reliable. It goes ex-dividend on May 15th for around, can't see exactly what that is, but anyway, this pays monthly, so that's what's nice. It actually pays about a 10.5% annual dividend. Some of these dividend plays like this are best to buy in nice big pullbacks like you see back last October or even in April. That's the area to really load up on these. But right now, this has a breakout look to it. Wouldn't be surprised if it goes higher. I own some of this. I want to capture that dividend. Next, Charber 70, STNG was on the watch list over a week ago. Beautiful pattern. Great trade. Take some profits if you haven't done so. Charber 71, SLQT, same deal. One of my longs was resistance around that 206 area. Hell of a trade. Great volume breakout. Take some profits. Charber 72, FE, First Energy. Long idea of mine from 2 weeks ago. Has just steady Eddie moved up. Finally, some profit taken today. This is one, volume starting to lighten up on it. I'd be out of this puppy, move to something else that's moving. It's been a good trade. Charber 73, CEG, another one, energy stock that played out beautifully. Nice break from that tight coil. Charber 74, Biogen, had a bull flag look to it. Again, it hasn't had a major big run here, but it's moved up steady Eddie. So just trail those stops up, maybe just below that 9 EMA there. Charber 75, Adobe was a long idea from a few weeks back. It hit its measured move. That was a good area to take some profits. Otherwise, it still looks okay here. May form a higher low and try again. Charber 76, TMDX, another beauty that broke out amazingly. Charber 77, Walmart. This was a long setup last week, broke out. Today it tested those previous highs where it found logical resistance. Now, be aware, earnings is May 16th. Next, Charber 78, Starbucks. As you know, this one got absolutely hammered on earnings, sold off into this demand zone, bouncing back a little bit. Charber 79, the reason I mentioned Starbucks is here's the daily. This is set up on that big gap down sell-off on earnings. It's set up to a CCI bungee setup. So here's how these setups work, guys. I look for the CCI indicator to get very oversold, say below -200. This went below -300, and then it proceeded to diverge. It went higher while price went lower, so you get a big positive divergence there. Then you look for a trigger on price. Your trigger, you got a great trigger off this doji here. 72.86 was your trigger. You need to put a stop immediately at 71.80. So essentially you risk just over $1. That's very good on a $72 stock. With your target initially at the 9 EMA, which was tagged today. These are very mechanical systems. So they're basically like a mechanical system. You have your exact trigger, your stop, and your target, and your conditions. Beautiful trade. Charber 80, Micron, one from Steve on the weekend, pushing up here a little bit. Charber 81, here's the new one I added tonight, LU. It's in a tight coil. We like these coils because these can have powerful moves. Some others we're monitoring, AVGO, Broadcom, it's still in this pattern. It's rallied up to the resistance area now. Charber 83, Jets, airline ETF. Airlines have been strong lately, and this is trying to break out here. All right, guys, that'll do it. Futures tonight are down 3 points, and Gold is up $3. So not much movement. Again, a lot of the movement is likely to come on some of this economic news this week. Have a good rest of your evening. Thanks for all your support. If you're a YouTube subscriber and you haven't subscribed to us, please consider subscribing. Our 6-month membership is the best. You'll get 5 newsletters a week, dozens of trade ideas. We have a community. You also get alerted to our mechanical system trades, versus YouTube where you see, maybe 2 videos or 3 videos a week. All right. Have a wonderful evening. Take care.